Hey, what's up everybody? My name is Rainer and welcome back to this week's market analysis. So I was on Facebook and then I think someone by the name of Bobby Lubos from the Philippines, he dropped me, he did a message on the Facebook group and he asked me whether, a very interesting question. He asked me, he said that, Rainer, in the event that you are positive in profit, right, in the ongoing trade, and there's a big news that's about to be released, right? He asked me whether will I, be shifting my stops to break even, or will I, move my stops just to lock in more profits, right? Because there's a big news and there's a possibility that the news may go against me and stop me out of the trade. So he asked me, whether is it wise to put the trades to break even or to protect your open profits. And my answer to Bobby is this. As a trend follower, I trade solely price. I do not let the news affect my trading decisions, right? Because if you look at it from a news standpoint, right, one of two things can happen, right? It's either the news is going to propel your trade further in the money, or it's going to, go against you and, maybe eventually stopping you out for your trades. So for me as a trend trader, I basically trail my stops according to my trading plan. Basically, I follow my own trailing stop mechanism, right? I do not let news affect how I trail my stops, because if you look at it, right, it's basically a 50-50 thing, right? There's 50% of the time the news will push the trade further in your favor, and 50% of the time it will go against you and maybe stop you out. And if you look at it over the law of large number, over a series of many trades, what usually happens is that you have trades that make you money and trades that stop you out, and you combine them all together. Overall it basically negates one another. So my answer to Bobby is that I do not purposely set my trades to break even in the event that a big news is coming out. And with that aside, right, on this week's market analysis, right, I'll be looking to cover a few pairs, right, like gold, the Aussie dollar, and the S&P. So all this and more in this week's market analysis. I'll see you there. Okay, so the first pair we'll be looking at is the Aussie dollar. So I think it's a pair that I've covered, I think, over the last couple of weeks. I said that, it's bearish. The trend is still clearly towards the downside. You see lower highs, lower highs, lower highs, lower highs, lower highs. And you have lower lows as well. Pretty obvious on the chart. One over here, here, here. And right now, price basically broke down this key support level. And it's trading lower right now over the last 3-4 weeks. And if you recall, I mentioned that on the daily chart, we had this head and shoulders pattern, right? This is the left shoulder, this is the head, this is the right shoulder, followed by this neckline over here. And also, taking into context of the trend, it is a continuation pattern for me because the trend is still down. And the breach of this neckline, right, furthermore, put price down lower over the last few weeks. So I said there was a potential flag pattern over here, and we had a little bit of follow through over the last couple of weeks. So another thing to share with you, right, using the charts, using price action, you notice that it's on a 4-hour chart. You notice that we have a series of lower highs as well, here, 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 and here, followed by this support. So basically this is what is called a descending triangle, and it's usually a bearish sign by the markets, because you see that the bulls, right, they tried to push price up higher, then it failed, then the bears came back in control, the bulls tried to push it up once more, it failed, the bears came back in control, and the bulls tried to push it up again, it failed, the bears came back and pushed price down lower, and the bulls did a final attempt to push price up higher, again it failed, and the bears came back and pushed price back down lower. So you can see that the bulls are always being subdued by the bears, and each rally, right, each rally is getting weaker and weaker each time. So looking at it from a price action context, this would actually anticipate you to at least try not to get long on this Aussie dollar on this time frame, because the longer term trend is down, and also this kind of structure, this descending triangle, is telling you that the bulls are being contained by the bears. So I wouldn't really advise going long. But what you could do is actually look to trade short. For those who are not short, what you could have possibly done is to trade the breakout towards the downside. But if you're not in this trade, alright, another trading idea, right? Disclaimer, right? All trading ideas, please do your own due research, right? Because I won't be responsible for any of your losses, right? This is just solely for educational purposes. So with that disclaimer aside, right? For those of you who are looking to get short, what you can look for is a potential pullback towards the 20 and 50 period moving average, which has been acting as dynamic resistance. So this is a potential shorting opportunity as well. So this is my take on the Aussie dollar. So up next, let's have a look at gold. So for gold, where are you? Okay, gold. So last week, right? I think gold was pretty big in the news because on Monday morning, the opening of gold, it basically sets the entire range for the week. You look at this on this gold chart, on a daily chart. Notice this candle over here. It basically on the Monday morning, within the first few hours, it did this spike all the way down over here, and then it basically had this snapback rally, and price is consolidating here once more. So I think that was the biggest mover, one of the biggest mover in the Monday morning for gold. And I think I've seen, right, a few traders messaging me telling me that they were not using their stops, and they basically blow up about half of their trading equity because of this spike down. So again, right, a word of caution, not caution, but something to know is that every trade you put on, you have to put on a stop loss, right? Trading without stop loss isn't trading, it is gambling, right? It's a matter of time before the market catches up with you, and you can just wipe out your profits that you have accumulated over the months, over the years. Just one trade like this is enough to wipe everything out. So always use a stop loss when you're trading. So for gold, looking at the 4-hour chart, for those who are not short, right, what I could look at right now is that I noticed that gold is coming to this key area over here, and you can see that it coincides with the dynamic resistance over here, as well as a potential resistance as well, this area here. So for those of you who are looking to trade, right, there's a few ways you can go about it, right? More aggressive traders, what they do is they have a sell orders in this zone. For those who want to wait for confirmation by the markets, another thing you can do and look out for is to wait for a price action reversal signal before you get short. It could come in the way of a bearish pin bar looking like this, or an engulfing pattern which will look something like this. So there's a few ways you can go about, whether you want to trade without this confirmation, whether you want to wait for confirmation. Definitely they have their pros and cons that comes with it, and this is entirely dependent on your own trading style. So this is an area that you want to watch for in gold in the coming days. And last but not least, I would like to talk about the S&P 500, because I tell you, to me, honestly, this is one of the toughest market to trade, especially so if you're a trend follower or trend trader. And here's why. So looking at the S&P, right? Okay, found it. This is the daily chart of the S&P. But let's look at the broader macro perspective, right? The weekly chart, it's still clearly in an uptrend, right? It's still clearly being supported by the 20 and the 50 period moving average on the weekly chart. So longer term trend is still towards the upside. But if you are trading on a lower time frame, say maybe like the daily charts, okay, daily is not exactly a lower time frame, but it's a daily time frame. It is going to be difficult to trade this market. Just look at it. The amount of chop you get back and forth, right? You have a swing down followed by a swing up, another swing down, swing up, swing down. Then we had thought there's a breakout over here. Turns out to be a false breakout. Price swings back down, stage another rally, swings back down. Then it whipsaws and chop all the way up near the highs. Then he had the massive swing down, retest the highs here once more, and right now it's looking set to head lower again. So if you are a trend trader, you want to get long and hold for a big run, right? This kind of market condition is actually pretty tough to trade from, right? I wouldn't want to short this market, and neither do I want to establish longer term positions, right? What I would do is just to establish swing trades, right? Wait for price to come to areas of value like here, right? And just capture one swing towards the resistance over here. I wouldn't anticipate a breakout, of higher prices, but what I'll look to do is just to queue my trades at significant key areas like this I've highlighted over here, and look to capture one swing in the market. That's my plan to trade the S&P. Just to capture one swing. And of course, if you don't want to trade it, that's fine as well. It depends what kind of trader you are, whether you're a position trader looking to capture trends, whether you're a swing trader looking to capture swing, Or maybe you're a combination of both, like me, right? I do swing trading as well as trend trading. It really depends on your own trading style. So the S&P 500 is a market to, to look out for as well. Not the easiest of market to trade right now for trend followers. So what you can do instead, is to look to capture swings on the S&P. So with that, right, that's all I have for this week's market analysis. I hope you'll find it useful. With that, I wish you all good luck and good trading. I'll talk to you soon.